NIO was down over 8% today at times and closing just under 8% if you include after hours. Now, this is an extreme move to the downside. So let's take a look at any news that is going on today, the technical analysis, and the big moves that I made. I added a significant position to my already largest position in my portfolio, which is obviously NIO. So let's take a look at that, as well as what the analysts are saying with NIO. And my cat just went absolutely insane. So for the backflip that my cat just did off the clothes hanger, hit that like button for me, subscribe to the channel if you are not already. We are also doing a YouTube portfolio, hopefully starting that in the next couple of trading days. It's taken a while to get the funds switched over to that account, so I do apologize for that, but that'll be up and running in the next couple of days. So let me know down below in the comment section what you guys would like to see added to this portfolio, and with that, let's get into it. Now, as for why NIO sold off so hard today, the only thing that I could gather that was definite is that a Wall Street analyst said that the ongoing global shortage of semiconductors will continue to hold NIO's production down for a while longer. And we all knew this. This is not anything that is new. They even said in their conference call that they expect things to get back to normal in next quarter, but that is implying that it may not. So we already knew this. So I think the sell-off is way overdone, and eventually analysts, people will come to their senses like, hey, we already knew this, and start buying back into NIO. So I'm not too concerned about it. Even though I am a long-term shareholder in NIO, I have not sold any shares and don't plan to for a very long time. And it says, so what? Citibank analyst Jeff Chung, who recently hosted a call with NIO management, wrote on Thursday that the chip shortage has remained, in quotes, the key constraint for NIO's production in May. NIO, along with Ford Motor Company, BMW, and Hyundai Motor, has suffered from the effects of a February fire at Japanese chip maker Renesas, which has reduced some auto suppliers' access to chips even further for the time being. According to Chung, NIO said it felt the impact of Renesas fire peaked in early May, and management now expects supplies to begin to improve in June or July. Chung maintained his previous hold rating on NIO stock and his earlier price target of $57.60. So I do think the sell-off is way overdone. We know that there's going to be a chip shortage crisis for quite a while going into the future. This is not anything that was new, and I'm surprised the market hasn't priced this in for NIO and all other EV makers, really, because it's not just NIO that is selling off today. Pretty much every vehicle producer is selling off today. So I just think it's a little overdone. People have short-term outlooks on these things, and if you're a long-term investor, there's really no need to worry with this. It's actually a great thing because you can buy shares for cheaper, and I do need to average down, so I do welcome a sell-off, even down to the $20 range. I would welcome that to load up on my position. Also, do want to read you guys the conclusion of this article that I read the whole thing, but I do think the conclusion of this is pretty good. It says Wall Street's take. Consensus among analysts for NIO is a moderate buy with 7 buys and 3 hold ratings. The stock has an average analyst price target of $60.40, which implies 78.27% upside potential over the next 12 months. Says the bottom line, NIO is one of those hyper growth stocks that investors need to keep on their radar. This is a stock with all the catalysts in its favor right now. It isn't just growing, it's growing fast and profitability. NIO's position as a tech and EV play is working to its disadvantage right now. The market is selling off speculative names and throwing excellent growth stocks out with the bathwater. Accordingly, NIO's near negative 50% discount to its all-time high could be a great buying opportunity for long-term investors. So Wall Street has spoken. They like NIO, but it's an easy target for short sellers right now. Obviously, with constraints in the chip market, it's a no-brainer. Short NIO, short EV stocks, it's just a hands-down clear win at this point. But when this does reverse trends, it will reverse hard and fast and cause short squeezes along all of these stocks like we seen in mid-February. That is just a fact, and it's going to happen one day or the other. I'm not saying it's going to happen anytime soon. Probably mid-summer to late summer, even fall of next year, we should be on track to see these stocks really start to rebound. The data has not come in today for the short volume ratio today, but I will have that linked in the description. After you guys see this video, you guys can check back into that to see if it has came in, because that'll be interesting considering we are down 8% today. That'll be good to know how many of these shares are being sold short. But as far as yesterday, we had 22% short volume ratio, and we did have a high market volume, almost 76 million. Out of that, 16,555,000 were shares that were sold short. And if we do take this back to about the 10 days or so, it's consistently no lower than 20% and all the way as high as 55%, somewhere in between the middle of 21 and even 27% as a median price. So I would estimate the short interest is about 24%, 23, 24%, just doing some rough math here. And this is only likely to increase. Shorts, once they see this short effect going on with NIO, with them all shorting the stock, because essentially that's what they're doing, they are going to get greedy, just like they always do. They get greedy and they double down and they double down and then they double down. And then once you do see that major pop, that 20% short squeeze in a day, like we just seen with AMC, you see shorts exit their positions, and that's why you ultimately get that big push to the upside. But it does make them get jumpy, and that's why I'm saying we will see a big move to the upside one of these days. I'm not saying anytime soon, but within the next couple of months, this will surely catch up to them. But I do think there will be some volatility, so I wouldn't be surprised to see NIO down again tomorrow, and then come Monday, they're up 10%. That just wouldn't surprise me in this marketplace. Technical analysis also looks very, very bad. You could see we broke past our level that we have been consolidating on. We actually seen one bottom, two bottoms, three bottoms, and then we were consolidating around this bottom, and that is about $34.55, and we have cleanly broke past that, currently being at $31.22. So we have zero support level, guys, until we get to about the $37, $38 mark. I'll go somewhere in the middle around where we were consolidating around at about $28. So I guess that's not in the middle, but that is our only support level as of right now. So this could get really, really bloody before it gets better. There's nothing for traders to go off of. There's no bottom to look for. There's no support, nothing. And as far as a bounce up right now, I think it's highly unlikely. Actually, our $34 mark could become our resistance level. That's typically how these things work. Once you fall off past your support level, that level turns to a resistance level in most cases. Sometimes you'll have a brief dip and then bounce, and then it'll remain a support level, like I think ETC is happening right now at the $85 price point. But I do see us going back down to about the $27 mark, and this is where we really started to fly last time. And this is pretty much one third of our share price at $27 compared to our high of around $67. So that's an incredible move to the downside. I do think it'll take a little bit to get there. I'm not expecting we're just gonna gap down to that point, but I mean, guys, just look at the volume on this chart. Look at the green candlesticks to the red candlesticks. It's just absolutely insane right now. I didn't expect this to actually happen this fast, but it does look like we're going down to about the $27 mark. And if we break to the $21 mark right here, which would be our next support, I just quite frankly don't think this is going to happen, because everybody and their family would be buying NIO shares. That's an incredible steal at $21. But that is our next support level. So we are either going to break to the $28, $27 level or the $21 level before we get a significant bounce. I don't really think we're going to get a bounce in between this point, in between the 31 and the 27, but it is possible. And then I would imagine, if not, we're just going to consolidate in between the 33, the 31 and the 28. So somewhere in between this range, that looks likely. We really need to establish a bottom right here. We might establish a new bottom, around the $30 mark. That's going to be somewhat of a mental resistance level, but it's on a technical basis, it's not a resistance level at all. There's nothing right here. We completely just started going crazy at this level, but we spent zero time here. So our real support level, like I said, around the $28 mark, and it could get very, very bloody. So I'm not trying to sell you guys short on something. This is really, really bad, and especially if we break. Shit, we already broke it at $31.88, and we firmly broke that by about 60 cents. Even if we break the $31 mark 15 cents, which is only a couple pennies away, then that'll be retesting our lows all the way back in November, guys. This is absolutely insane. If you ever wanted to pick up shares in NIO, this is probably one of the better times to do so. Even though we could come down further, I still think, $31 and a $50 billion market cap is an absolute incredible price. $51.9 billion market cap. They're doing over $1 billion a quarter for the past couple of quarters. So that's what I'm looking to do. I am really, if we go back down to the $21 level, I am loading up. I'm selling a kidney. I'm doing whatever I got to do to load up on NIO. If we go back down to the 27, then I will definitely be buying very heavy. But I'm looking to buy heavy right now. I'm averaged in still at $48.20. But I did buy a lot of options today. I completely doubled down on my options. Let's see right here. I bought 3 hours ago. I bought 4 of these at 215 is the first, 219 the second, 220 the third, and 210 for the last one. And this is just averaging down on this monstrous position. I mean, I've spent $5,000 on these contracts. I now have 10, but they are the January 20th, 2023. So if we get a bounce in between, early this summer or late this summer, in between like middle of 2022, a significant bounce back up to like $70, $80 on NIO, then I'll make a lot of money on these. If not, I'm totally going to get clapped, and hopefully averaging down on the shares, which is my next move, will hopefully balance out that loss. But I don't expect this to be a loss by any means. I do think these are at a very, very cheap discount, considering the first NIO contracts I bought was only 2 months ago. 2 months ago, the first one I bought was $990, and now they are $200. Get out of here for 2 months, and you still have like 18 months on these contracts. So I do think these are steals, and I've been buying these all the way down for last one I had bought was April 16th. So I figure, it's even down 50% from the last one that I bought. I need to average down big on this position. So that is exactly what I did, bringing my average cost per contract to $505. This will make it easier to get out of these contracts if I need to. If if something happens to NIO, I should be able to get out of these fairly quickly and easily once we do get a significant bounce. So that is what I am doing as far as all that. I have not averaged down on the shares. I am looking to next thing, still have 100.66 shares, and as soon as we do get a good bounce too, I am looking to sell a covered call, just because this could be a prolonged downtrend and I would rather collect some free premium if I so can.